Ripple holds tens of billions of XRP locked away, yet a quarter of that supply may soon need to hit the market. One decision could instantly reshape XRP's entire price structure and redefine how liquidity circulates across the entire network Ripple has spent more than a decade building. The magnitude of what's coming is far bigger than most investors realize. Today, you'll uncover why Ripple may be forced to sell up to 25% of the XRP released from Escrow, how this affects price stability, and why some buyers actually want those sales to happen. By the end, the final revelation will completely flip the usual narrative surrounding Ripple's sales, especially for anyone who has seen every escrow unlock as a threat rather than a mechanism built for long-term equilibrium. Before we dive deeper, consider this scenario. If Ripple sold billions of XRP tomorrow morning, would you interpret that moment as panic or as opportunity? Your answer reveals a lot about your relationship with volatility. Many long-term investors eventually discover that their biggest breakthrough didn't come from a price chart. It came from understanding the system behind the chart. Leave your instinctive reaction in the comments. You might be surprised how divided the community truly is, because this question touches the core of how a supply-driven asset behaves in a global financial ecosystem. Have you ever wondered why the word escrow triggers such strong emotions among XRP holders? Escrow isn't just a storage mechanism, it is the rhythm that governs Ripple's token economy. Each month, 1 billion XRP unlocks like clockwork, and the ecosystem braces for potential impact. This cycle dictates supply, shapes confidence, and influences liquidity in ways most newcomers rarely understand. Markets fear uncertainty, not structure. Escrow, ironically, is structured. When you learn how these unlocks influence sustainable growth, fear dissolves and strategy begins to form. The smartest investors don't watch prices. They watch patterns, especially escrow patterns. Most buyers overlook a crucial fact. Ripple still holds a massive share of the total XRP supply. This is not a vulnerability. It's a strategic reserve that anchors long-term stability. When a company with global ambitions controls a significant percentage of its token, the asset behaves very differently than a free-floating speculative coin. Ripple's reserve acts like an economic throttle. It expands or contracts the circulating supply depending on liquidity needs. The reserve also allows Ripple to fund partnerships, expand infrastructure, and support worldwide payment networks. Stability comes from intention, not luck, and Ripple's reserve structure is built on intention. Imagine waking up to headlines announcing that 1 billion XRP has just been unlocked. Panic spreads. Influencers shout warnings. Meme accounts predict collapses. But in reality, only a small fraction of that billion ever reaches the market. The rest returns to escrow, untouched. This rhythm prevents oversupply while giving Ripple the resources it needs to operate. The unlock feels dramatic, but the underlying mechanics are controlled, predictable, and balanced. Chaos only appears when people don't understand the rhythm. Consider an investor named Alex who started accumulating XRP years ago. Every monthly escrow unlock terrified him. But after watching the pattern for years, he noticed the truth. The price rarely collapsed because of an unlock alone. Even large releases were absorbed naturally over time. The key insight came when he discovered Ripple's habit of relocking vast amounts after each monthly unlocking. His fear had been emotional, not logical. This realization changed his entire strategy. Emotion melts under analysis. And Alex became a better investor the day he stopped reacting and started understanding. Many buyers interpret Ripple selling XRP as automatically bearish. But that idea collapses the moment you analyze the scale of the global financial corridors Ripple is building. A healthy ecosystem requires liquidity. Ripple doesn't sell XRP as a short-term profit play. It sells XRP to strengthen real-time payment channels that rely on XRP for settlement. These sales are infrastructure-driven. They ensure that banks, institutions, and liquidity providers have enough XRP to facilitate cross-border transactions without friction. A system without liquidity dies. A system with just enough liquidity thrives. Here's a powerful dual insight. Ripple may unlock 1 billion XRP every month, yet often sells only 20 to 25% of that amount. Meanwhile, the majority, hundreds of millions, is relocked into escrow for future cycles. Two opposite actions occur at the same time. One fuels operations, the other protects price stability. It is a controlled dance between supply and demand. Few ecosystems in crypto have such a sophisticated rhythm. It's one of the reasons XRP has maintained stability despite facing more fear, uncertainty, and doubt than nearly any other asset. A financial analyst once compared Ripple to a global liquidity provider rather than a traditional crypto startup. That perspective shifts everything. Liquidity providers don't dump assets. They optimize their circulation. They maintain flow, they reduce slippage, they stabilize volatility by ensuring markets always have enough supply to function. Ripple's approach to XRP aligns more closely with institutional liquidity management than with speculative selling. Understanding that changes how you interpret every sale Ripple has ever made. Ripple is expanding rapidly with solutions like liquidity hubs, CBDC platforms, institutional payment rails, and software suites that embed XRP into global financial infrastructure. These innovations increase the potential volume of transactions that require XRP. More corridors, more bridges, more settlement paths. With each new product, demand for liquid XRP rises. High-volume systems cannot function if supply becomes too scarce. Ripple releases XRP not to weaken the price, but to ensure that the system can grow. Think of it as fueling an engine, not draining it. Why 25%? Because Ripple's operations, expansion, partnerships, and institutional liquidity needs historically aligned with selling only a fraction of unlocked XRP. The rest is relocked. Selling too little would starve the system. Selling too much would destabilize it. The 25% figure is a strategic compromise that balances growth with scarcity. It's not arbitrary. It's a calibrated formula refined over years of observing market reaction and infrastructure demand. The SEC lawsuit forced Ripple to transform how it approaches transparency, institutional sales, and market disclosures. Ripple's operations now function under a higher standard of scrutiny than ever before. Paradoxically, this pressure strengthened Ripple's internal discipline. It improved clarity. It tightened processes. Regulatory fire forged operational precision. XRP didn't crumble. It evolved. Market reactions to Ripple's potential sales are far more emotional than rational. Traders often imagine catastrophic dumps, but historically, fear of sales has caused more volatility than the sales themselves. Markets often price in fear dramatically, even when the data shows minimal long-term impact. The greatest risk isn't the sale, it's the imagination of the sale. Do Ripple's sales consistently push XRP's price down? The data says otherwise. Predictable and proportionate sales rarely cause meaningful long-term downward movement. Markets absorb them through liquidity pools, institutional corridors, and balancing mechanisms. Volatility spikes only when markets are surprised. Ripple's structure is designed specifically to avoid surprise. A predictable seller is far less dangerous than millions of unpredictable traders reacting emotionally. If you want deeper breakdowns of escrow cycles, liquidation models, and how XRP's circulating supply may evolve, subscribe. Staying ahead of supply dynamics is the difference between reacting late and anticipating early. One of the biggest misunderstandings is believing that every unlocked XRP is dumped. That misconception causes panic. Unlocking simply schedules availability. It does not force liquidation. Ripple often relocks hundreds of millions. Confusing availability with liquidation creates blind fear. Investors who fail to differentiate the two frequently misinterpret market signals and make poor decisions. Here's something counterintuitive. Ripple's strategic sales have occasionally supported price stability. Well-timed liquidity injections reduce slippage, stabilize spreads, and improve institutional transaction flows. Without adequate liquidity, markets become brittle and prone to sharp swings. With balanced liquidity, markets remain durable and efficient. Sometimes selling strengthens the system more than holding. Ripple funds expansion, partnerships, CBDC pilots, enterprise adoption, legal battles, and infrastructure development, partly through XRP sales. These investments expand the long-term utility of XRP. Every corridor opened increases real-world usage. Every institution onboarded increases liquidity flow. XRP's value is tied to the size of the system, and Ripple sells XRP to grow that system. Growth today creates potential value tomorrow. Most XRP holders never consider who actually buys from Ripple. The buyers are not retail traders. They are institutions, liquidity providers, and enterprise partners. These entities accumulate XRP for usage, not speculation. They require steady supply to settle transactions at scale. Their demand is slow, quiet, and powerful. They buy for utility, not hype. That kind of demand supports long-term price resilience more than retail enthusiasm ever could. What happens when Escrow nears its final cycles years from now? Circulating supply becomes more predictable. Markets fully mature. Ripple's reliance on structured unlocks diminishes. The ecosystem transitions from controlled distribution to organic circulation. Scarcity becomes more authentic. Predictability increases. Market psychology shifts. This transition will define XRP's long-term price structure far more than any unlock today. Here's the twist. Ripple may not need to sell 25% forever. As utility grows and liquidity becomes more self-sustaining, the market may reach a point where organic transaction flow replaces the need for operational sales. Ripple's end goal isn't to sell XRP, it's to create a system where XRP circulates naturally, where adoption pulls supply into motion without Ripple pushing it. When that moment arrives, sales become optional. Utility becomes the engine. We've explored why Ripple sells XRP, what the 25% figure really means, how Escrow stabilizes the market, how institutional adoption shapes liquidity, and why certain sales actually strengthen the XRP ecosystem. Understanding these mechanisms replaces fear with clarity. It turns uncertainty into strategy. When you understand the system, panic disappears. If you're ready for the next major insight, watch the upcoming breakdown on how XRP's active supply could shrink significantly in future cycles. This content is not financial advice. Consult a qualified professional for investment decisions.